Yeah, hello guys. This is another video. This is part 5 of the series where I break down all you need to know about smart money concepts in order to be profitable using this model. So in our previous video, we've talked about the part 1, we talked about how to identify value pullback. Then the part 2, we talk about how to map the structure, how to identify your trading range. Then the third part is where we discuss about inducement. So in this video, we'll be talking about how to identify order flow and how to use it. Both I will explain the diagram. I will also explain it on the ray chart. So we are talking about order flow and order block. So first of all, order flow is according to what I put here, you can see we have when the market is bullish like this, when the market is bullish, then this is where we look for bullish order flow. When the market is bearish, this is where we look for bearish order flow. So, as I said here, market is bearish order flow is the last buying momentum before the market rally down. So, in a nutshell, when we are talking about bearish order flow, the last buying momentum in a bearish movement like this, that's where we find bearish order flow. So this last buying momentum like this before the rally move down, last buying momentum before the rally move down. So why the bullish order flow is last selling momentum or movement before the market move up. So I will explain it in the diagram, and I'll try my best to make sure that you guys are able to comprehend. Then the other block are the refinements of the order flow. So it means that we find the order block inside the order flow. So let's dive into it. So let's say we are talking about the bearish movements. Now the market is bearish, as you can see. Market is bearish like this. So, and in my previous video, I've explained how to map structure. You can also watch that video. So let's say we have this level as break of structure. Why? Because market took out inducement. So we are not actually talking much about that today, but just to start from using this from this diagram. So in this situation now, where are we going to find our order flow? So first of all, where is the last buying momentum before the push down? So firstly, you see we have a buying momentum here like this. Another one, we have a buying momentum here. These are order flow. Then we have a buying momentum here. These are order flow. So let's say in this situation now, let's say market also did what? Market creates another movement to the down. So it means that we have another buying momentum before what? Before the market comes down. So these are our order flow. So how are we going to pick our entry? This is the big order flow like this, because if you look at this is the last buying momentum, but the refinement of the order flow of this big order flow is what we have here. So in this situation now, our if we have, let's say we have 4 buying momentum before the market comes down. Now we have our trading range, because as I explained in the previous video, this must be protected. So, and if you watch the structure mapping, you will understand this better. So what are we looking for next? If we are mapping our structure, I explained that we look for the last valid pullback that the market did. So this level will serve as our inducement. So any order flow that is below our inducement will be regarded as a liquidity. It's a smart money trap. So we are not using such order flow. This is how you definitely use it. I'm going to explain it to you. So, and to explain the one that is valid and the one that is not valid. So that you will know where you are going to take the trade, the one that has been mitigated and the one that hasn't been mitigated. So, in this case now, this level we serve as our what? We serve as our inducement. So, we are not going to reckon with this last order flow. So, let's remove this. So now, if you look at this one, you will see that if we extend it here, it has been mitigated by this move. After we break down, market retest it and drop. So it means that this has been mitigated. We are not going to use it. So if I move this one again, you see that this one has not been mitigated because market refused to touch it. You only move close to it, form fair value gap, and what? And drop. And onto the next one, if I extend this one, you see that this one has also been mitigated by this next order flow. So it means that we can't use this because it has already been what? Been mitigated. So what we look for in this situation is, once we identify our structure, like our break of structure, then we look for all our order flow. It can be 3, it can be 4, it can be 2, it can be 1. Then after that, we look for our inducement, which will be the last valid pullback or the last order flow. So now you see that you've eliminated that. Then what are you looking for? What you are looking for is to look for an order or underflow that has not been mitigated. So, and as you see, this is what we have here. The other block hasn't been mitigated. So that's why you see, in a situation whereby the market will do what? The market will push up, then it will continue to go and mitigate this order flow. Then market will do what? Will come down. So this will enable us to have our what? Our break of structure here. So in this place, this is where you are expecting to look for your entry from. So, but let's say we have a situation like this and market created something like this. Market created something like this, and then we are to place a trade, or we are to do what? We are to look for the same criteria again. It means that this is our trading range. Then we will wait for what? This will serve as our inducement. This is what we need to first pick out first, our trading range and our inducement. So in a situation that markets come back to take out our inducement like this, and as I explained, you can see that after we identify our inducement, why we can't use this order flow is because it's below our inducement, so we can't use this order flow. So what is the next order flow? As I explained, the buying momentum before the market comes down within our trading range. This is the buying momentum. You can see this is also the buying momentum. We can see in this situation now, we only have 2 buying momentum before the what? Before the market comes down. So if you look at it clearly, you can see that we use this as an inducement, so we are not going to use it. It means that we only have one valid order flow. Now look at this. As this is valid, but it has already been mitigated. You can see that this movement, after the market broke down, then went back there to mitigate it and also form what we call an inducement. So it means that we are not going to use the order flow in this case. But what comes first is for us to identify our order flow. So what this where we will now explain where order block comes in. So now we start from the top of this, because if you also look at it, this is also the first buying momentum before this, the buying momentum before we have a collapse of this thing. So we can pick the order block from this level. So in this situation, we come to this top and pick our order block. We identify our order flow. So, and as I said, the order block is a refinement. As I said here, our order block are the refinement of order flow. So it means that in most cases we will find an order block in what? In the order flow. So it means that you come to the top or inside the order flow, we might have our order block here. Market might mitigate the order flow, but might leave the order block. Remember, order block also has its characteristic, the buying candle, not the moment. These are the momentum, but we look for a last buying candle before the market comes down. Then that candle must have a fair value gap. That's what make up our order block. So in a situation we have one here, then we can also find one here, because look at it, this will be the last buying momentum. So if we have a candle that has a buy momentum that creates a buy like a green candle, then before we now have sell, then give us a fair value gap, then that's where we will have our order block. So in this situation now, markets can decide to mitigate this order block and what, and push down and do what, and do something like this, mitigate this one again, then give us more direction, then fail this structure. In a situation that we have this change of character, this is valid. Because the order block is there does not mean that market must respect it. You can't tell market what to do. We are only following what? We are only following the flow of the market. So it's not because you have made up a case for the chart or for the market, you have the order block, you have your doesn't necessarily mean market must respect it. But when you focus on this consistently, that's where profitability will come. This is where you can, how you can build your trading system. So in this situation now, what are we having here? Let's both look at it and see what we are actually having here like this. Let me readjust it. So you can see that we have this buying momentum all over after we have change of characteristics, change of character here. So it means that market is telling us that he has stopped selling, he has now looking for buying direction. So what are we going to do? First thing, we identify our trading low. Now this is our low that must be protected by the market, because it's now trying to move into the buying direction. So look at this now. First of all, what are we going to look out for? We look out from this leg. Now from this momentum, we look out for our what? Our order flow. So we start from the beginning. So we can see that this is the first buy. And when I said we are looking for our order flow, it means that the last in the buy, look at this, in the buy, in the bullish order flow is the last selling momentum before we rally up. So we are looking for the last selling movement before we rally up. So if you look at this, this is the last selling movement before we rally up like this. Then another one is this. This is the last selling up before we rally up. Then another one is this. Then another one is this. So if we are left with this situation And what we will be doing is we will be waiting for market. Okay, after we've been able to identify our order flow, now what are we going to do next? From all these 1, 2, 3, 4, where is going to be our inducement? Because you can't do without inducements. Inducements is like the fuel that move the market. So you can't do without it, without inducement. Yeah, you understand? So you just have to what? You just have to make sure that your inducement is very, very important. So once you mark the inducement, and as I explained, the inducement must be, the inducement must be any other flow above. Now in this situation is above, not below. Any other flow above the inducement is classified as smart money trap. Shey you understand? It's classified as smart money trap. So you don't use the other flow that created inducement. So let's assume that market decide to not come here immediately and do what? And push up again like this. And push up like this. Sorry. So what are we going to have here in this case now? Let me redraw this. So market decide not to come at the first attempt and push up. Now it means that we can reckon with this order flow, then we will shift our inducement to this. Remember, this is the last order flow, as I explained. So you see that we have an inducement here. So the first order flow will serve as our inducement, which is the recent or the last order flow will serve as our inducement. So now we are left with 1, 2, 3, 4 order flow. So what are we going to do? Remember, we first identify this. Then if we shift this order flow to this, you can see that it has been mitigated already. So we are not using this. If we shift this to this, you see that it has not been mitigated. So we have it. Then this one also has not been mitigated. So now what are we going to do? We have 1, 2, 3 unmitigated order flow. So it means that first thing we need to wait for is to wait for market to come and first take out our what? Our inducement. So once market take out our inducement, it means that we have our trading range complete. So it means that we can trade from here, from this level. We can look for entry from this level to this level. So from this, sorry, let me redraw it. From this level, from this level, from this high, what's wrong? From this high to this high. So this is our trading range. So now looking at the inducement and also looking for the order block. So in this level now, in this first inducement, we can also identify our order block. Let's say we have this last selling candle before you buy as an our order block, refined order block. Let me put it red. So, and we come here again, we were able to find an order block here, a last selling, because remember, the last selling momentum before the buy, and it must have a fair value gap. Any candle here that give you fair value gap is classified as order block. So, but we choose the one that at least the last candle before the buy. So in this place now, we can also have an order block here. In this place too, because the order flow has been mitigated, doesn't mean we can't have an order block. You know, because order flow has been mitigated, does not mean the order block cannot also be used. So Then if you look at this is the last momentum, so this can also be our order block. So if you are faced with this kind of situation, what are you going to do? Look at this. You have order flow that hasn't been mitigated, order flow that hasn't been mitigated, order flow that hasn't been mitigated, and 1, 2, 3, 4, 5 order block. So what are you going to do is, let's say let's start by order flow. Firstly, the only order flow that we are to use is the one that comes immediately after the inducement and the extreme. Those are the two high probability order flow. The rest are smart money trap. And if we are also using order block, the order block we are going to use is the one that comes immediately after inducement and the extreme, which is here. So let's see what is likely to happen like this. So let's say market mitigates this. We have a 50% chances that we are likely to push up. But in a situation that market mitigate this order flow and probably mitigate the order block as well, then market fail. You can see this is going to serve as our SMT. We are not going to take a trade here. We are not going to take a trade here on the order flow, and we are not going to take a trade on the order block as well because it's not working. Then this order block can be valid, then this order flow can also be valid. Why? Because this is the first, if you look at it, this is the first order flow that comes immediately under the inducement, and this is the last order flow that comes under the inducement. So I don't know whether I'm getting this more clear or not complicating the issue for you guys. So this is what you need to do. You wait once you see the immediate one that come below the inducement that it has failed. The rest is what is an SMT. So it's either market mitigate this last order flow and push up, or if you need more liquidity, it will mitigate this extreme, then push up. So the extreme order flow and the extreme order block is the most important order block that you need, or the order flow that you need to execute your trade. So let me give you a last example before I show you on the chart. Let's say we have a situation where the market is doing like this, is doing like this. Mark this. You can see that we have, you can see that we have our order flow here. This order flow is not going to work because is above the inducement, so we are not going to use this. So what order flow are we looking for again? The one that is below the inducement. You can see that it hasn't been mitigated. So wait for this to happen like this. Wait for this to happen like this. So if this happen, now inside this place, if you now want to refine this order flow, then that's when you can now look for order block. So let's say you have an order block here. The essence of order block is to increase your risk to reward. Sometimes the order flow might be too big. So if you are taking a trade from here, from this level, if you're taking a trade from this level and put your stop loss somewhere here and target this high, is different from you taking a trade from this level, put your stop loss the same level, then target high. So you can see that the order flow is big. This one will give you 1 to 8.585, 1.1 to 1.8. This one will give you 1 to 4. So that's the advantage of order block. So it's a refinement of the order flow. So let me dive in and show you something that you can relate with on the chart. You can see that we will use this as an example, this level. So bearish, we are looking for, this is a bearish momentum. So I will only mark the order flow here because this video is already getting too long. So when the market is coming, you can see that this is the last buying momentum before. This is the last buying momentum. No, 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 I don't like this. No. This is the last buying momentum before the, yes, before we collapse. So you can see, if I'm to trace it, you can see we push down, push up, push down, push up, push down, push up, then the process continue. So you can see like this, you can see like this, you can see like this, you can see like this. So this is what we have here. So if you look at it closely, you will see that this is the last buying momentum. Market mitigated it by pushing up. Then this is another buying momentum that market created, and you can see how nicely market mitigates it again by doing what? By pushing up and drop. This is another buying momentum. These are other flows. You can see how market came back there and respect it and mitigate it. This is another buying momentum. You can see how market stopped there and mitigate it. This is another buying momentum. All this pullback are buying momentum. You can see how market respected it and pushed down. This another buying momentum. You can see how market respected it and pushed down. So this another one until the whole process change. So these are other flows. You don't need to stress. I think this is self-explanatory, or at least is direct. So these are the other flow. So the refinement of this other flow is where you have your other block. So if you have any other question, if you want me to at least re-explain this in a more simpler way, maybe you're having difficulties in understanding it, you can drop the comment and I will try my best to also make it more understandable. So that's it for this part, guys. Bye for now.